Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is Thursday, August 8th. This will be the last one of the week. We are going to take a look at advanced drainage systems out of the industrial sector. And before we get too far into the video, if you could do me a favor and hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure you hit that notification bell so you're notified whenever we put out any new content. We do these stock pick of the day videos Monday through Thursday. There's my dog, one of my dogs out back. We do these stock pick of the day videos Monday through Thursday where we take a look at a stock that's pulled back on the day to see if it is presenting any value. We also do a portfolio update every Sunday morning, so make sure you tune back in for that as well. And drop a comment down below. Let me know what you think of the video. Let me know what you think of this company. What are you adding to your portfolio? What might you be selling? Are you doing any options? Would love to hear from you down below in the comment section. Really appreciate all the subscribers out there. The channel continues to grow because of people like you. Over 1,000 subscribers now, on to 5,000 subscribers we go, and we're only going to get there with your help. So again, really appreciate everyone out there who's taking the time to do that. It does help with the YouTube algorithm. It helps to spread the videos a little bit further. And make sure you watch the videos to the end because that is one more metric that YouTube looks at. Now, this is the Vested Interest Stock Screener. This is how I look at a company in a high level to see if I'm interested in adding it to my watch list. Just because it meets 5 of 8, or in the case of banks and insurance companies, 6 of 9, I throw in price to book, does not mean I'm investing. It means that it goes on my watch list. I do more of a deep dive into the company, its financials, look at stuff like price to book. I might look at their PEG ratios. What does their revenue look like? Is it growing over time? Are their margins expanding? Are they paying down debt? Do they have more assets over liabilities? Lots of good information on their balance sheet and income statement. And if you are not willing to do that type of deep dive into a company, you should just simply select ETFs, something like VOO, Vanguard S&P 500 ETF, or SPY, SPY, another ETF that tracks the S&P 500. And the S&P 500 index is what Warren Buffett would recommend the average investor invest in. So that's what I'm going to recommend because I think Warren Buffett is smarter than me and probably smarter than most of us who are in the markets overall. Now let's jump back over to ADS here. And if you want to know more about them, check them out at www.adspipe.com. That's www.adspipe.com. That is their homepage where I pulled this information from. Water is the world's most precious resource. As an industry leader, we are committed to protecting and managing water by providing sustainable water management solutions that safeguard the environment and build resilient communities. At ADS, we are helping communities thrive, advancing future water management, all while making the world a better place. And that's really what they do. Water management, they are not, a water treatment plant. That is not what they are doing. They provide ways to keep water, let's say, out of your basement. If you're building a new house, for example, you may not even be aware of this. Around your foundation, around your basement, you would have this corrugated black plastic pipe. And what that does is it helps any water that trickles down around your foundation, it will funnel it off to a drain or off of your property somewhere to where it is not running into your basement. And that is the type of stuff that they offer. They are providing water solutions to keep water from building up on your property or in your basement, around your house. That is so the pipes, the catch basins, that sort of thing. That is what this company focuses on, and they are focused around agriculture, airports and ports, military and aviation, commercial and mixed use, green infrastructure, healthcare and education, landfill, again, construction. You'll find these products on almost every single construction project out there. Landfills, right? They don't want the water to pile up in landfills, or if there is water, they want to divert it safely into an area, especially with all the nasty stuff that comes off of landfills. They're going to run it into a catch basin rather than into your city water or city sewer. They'll run that somewhere else. Parking, again, you don't want water to build up on your parking lots. Residential, so it doesn't matter if it's a high-rise building or your house. They're going to provide that water sustainability or water management system. Sports, turf and golf, timber, transportation. Agriculture is another big one that you may not be aware of for something like this. If you have a field that you drive by and you might see a lot of water build up. What they'll do sometimes is they'll dig down 4 or 5 feet and they'll put big, again, corrugated pipes in there to help shift some of that water out of the low-lying areas into drainage ditches or that sort of thing. So that is what this company does. As storms increase in frequency and intensity, the climate patterns change. Our stormwater solutions help prevent floods, recharge aquifers, improve food security, mitigate the risk of water scarcity, and ensure quality of life in communities. That's really what their bread and butter is. They're a stormwater solution helping to get rid of that stormwater, that runoff, in a more sustainable way. Now, the reason we're taking a look at them down 1.91% on the day, we are talking about Advanced Drainage Systems, ticker WMS, out of the industrial sector. Closed out the day at $146.15. Looks like they're up a little bit in the after hours. 52-week range as low as $102.32, as high as $184.27. They are floating midway between their 52-week high and their 52-week low, and they are not within 15% of a 52-week low. Market cap of $11.328 billion, so small cap company. A beta of 1.55, so they are much more volatile than the overall market. You can see that volatility throughout the day, right? Big drop in the early morning trading, then about 9:30, big drop again, tried to recover, overall sell-off for the day. PE ratio, price to earnings, is sitting at $22.66 per share. That's a little elevated for a company like this. Again, in the 20s is really, in 30s is really for companies that are very fast growing, you know, typically high flying, high growth tech companies, something like that, or a new startup, maybe that's growing significantly. But for companies like this that have been around, especially one like this that's kind of parsed around the construction or agricultural industry that might be a little cyclical, this is a little high for the PE. EPS, earnings per share, $6.45 per share. Earnings date coming up August 8th, or actually was today. So they released earnings. I'm assuming their earnings was not great, or their forward projections weren't great, and that was part of the reason for this sell-off here. It's not a huge sell-off, but 1.91% on the day is pretty big for a company. Forward dividend is 0.64, 64 cents. They are quarterly payers, so divide by 4. Very low starting dividend yield on this one, 0.43%. Ex-dividend date, May 31st. Looks like they paid out on June 14th. So if you were to buy them now, you would be in line for the next dividend payout, though you're going to have to wait a couple months to get it. And according to Yahoo Finance, where I pulled this information from, they have a one-year target estimate of $187.11. So they see some upside as far as price appreciation for the stock price there. Now we're going to jump over to the right, and we're going to look at dividend yield theory. To do that, we look at their 5-year dividend yield average right here of 52 cents. We compare it to their current 0.43, or 52%, 0.52%. Compare it to its current 0.43%, or the forward over here, 0.43%, same number. And since it is lower than their 5-year average, that speaks to overvaluation on this one. At least according to dividend yield theory, this one is slightly overvalued. Payout ratio is extremely low, though, at 8.68%. That means they have a lot of runway to continue to increase this dividend. We'll see how fast they're doing that towards the end of the video here. Now we're going to jump down to free cash flow. As a dividend investor, I like growing free cash flow. It's typically, if a company has growing free cash flow, they have a growing dividend to match. Going back to 2021, you can see here $373 million in free cash flow. Now it looks like 2022 had a bit of a drop in free cash flow, but we're going to look at this line here in a minute, right? Repurchase of capital stock, so be aware of that right there. Looks like free cash flow was back up significantly in 2023, and 2024 so far looks like it's going to be pretty close to what we saw with last year. But remember, we're not done with 2024 numbers yet, so that's just to what they've reported to date so far, right? That would really, I think, be in line with the trailing 12 months. I'm actually going to give them growing free cash flow because I think that this drop in 2022 is accounted for with this big jump up in repurchase of shares. No repurchase of shares in 2021, but a big 292 million repurchase of shares in 2022 accounts for that drop from 373 million down to 125. And then that definitely is growth here in 2023. I would say so far we're pretty close to being where we were last year, if not above it. I'm going to give them growing free cash flow. We'll have to come back to this one at the end of the year and see if I was correct, but I'm projecting out that they will be better numbers than last year here. Now we're going to jump over to stockanalysis.com. This is another site that I like to go to for information. You pick any sites that you want. I just recommend you look at more than one for information so that you can make sure the information you're getting is accurate and up to date. Sometimes these places are a little outdated For example, as you can see, price targets were last updated from stock analysis on May 17th. May 17th, not March 17th. So this is a few months old now, right? We're in August. This was back in May. So they haven't done an update since May. So take this with a grain of salt, and that's why I look at more than one source for information, again, so I can make sure my information is accurate and up to date. They have 8 analysts that have taken a look at this. They call it a consensus buy, low estimate of $133, which would be a negative 9.02% drop from where it currently sits. Average estimate of $181, pretty close to what we saw with Yahoo Finance on the previous page. That would be a 24.41% increase, and a high estimate of $202, which would be a 38.18% increase. All the while, you could collect that, around 0.5% dividend yield. We're going to jump into statistics here. Look how well this company is reinvesting its capital back into itself. To do that, we look at return on equity and return on invested capital. I like 10% or better for these numbers. Return on equity, 48.5%, smoking high. Return on invested capital, 22.29%. Very good numbers overall. EPS growth, I like 5% projected over the next 5 years or better. They didn't have anything listed, so no check there. Revenue growth was not listed either. I don't like to see that. I wish they did, but they just didn't list it. Let's look at the dividend history here as we wrap this one up. Quarterly payer, again, very low payout ratio. I think earlier we saw 8%. They're saying 9. Either way, under 10% payout ratio is very low, with very fast dividend growth, 16% dividend growth, double-digit dividend growth. Very nice to see, especially with such low payout ratios. I don't mind low payout ratios if we have an extremely fast dividend growth, though that is lower than I typically look at under 1%. 4 years of dividend growth. I did go back and look. They started paying dividends back in 2014, and they grew their dividends up to 2019, then had a pause there through 2019 and 2020, and then over the last few years, they've started raising that again. So over 4 years of dividend payouts, but only 4 years of uninterrupted growth. Buyback yield of 5.18% and shareholder yield of 5.62%. Good numbers there. They do pay out on the March, June, September, December timeframe. Going back to 2021 here, you can see in November they were paying 11 cents, raised it up in May 2022 up to 12 cents, raised it up again May 2023 up to 14 cents. Most recent raise May 2023 14 cents, and then May 2024 16 cents. So most recent raise was in May, up to 16 cents. All right, let's jump back over to the screener. Understand the business. Again, that's kind of a gimme. That's where we start with all of them. You should be checking out their homepage to understand what the company produces, what are their products, how are they making their revenue, growing free cash flow. I'm going to give it to them. It definitely was growing over the last 3 years. We're into 2024. They've already projected out or started to project out some 2024 numbers. Looks like they're going to beat last year's numbers. So I'm going to give it to them, though we really should check back and see if that is the case at the end of the year. Growing dividend, yes, very fast growth, 16% dividend growth. Dividend payout ratio is extremely low, way under 75%, under 10% actually, so check there. Dividend yield theory says it's potentially overvalued, so no check. Cost basis is not within 15% of a 52-week low, no check. Return on invested capital and return on equity are both over 10%, so check there. They did not have earnings per share listed, so no checks. We got 1, 2, 3, 4, 5. This one wouldn't make it on my watch list. Let me know what you think of it down in the comment section below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And a lot of you out there aren't subscribed to the channel, so make sure you hit that subscribe button before you go from this video. Really appreciate all of you out there who have taken the time to do that. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do have a couple already on my list that I will be trying to cover next week whenever they pull back. If anyone else has any suggestions, go ahead and drop it down in the comment section below, and I'll work them into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we'll see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the investing counsel of a certified financial advisor.